All right, we actually hear it all the time. People are getting creative on how to hide their property, and for many different reasons, they do that. All right, but what do they need to know about hiding property by registering it under a company, a trust, or under someone else's name? Philip joins us for that shit. Philip, good morning. Welcome to Capricorn Family, Papa's Hardest Frequency.
Morning, guys. Thanks for having me, as always.
All right.
So, Philip, are we seeing more and more people trying to do that, like hiding property now? And I don't know, I gave you a reason about trying to keep an ex's dirty, filthy hands off of a property. So, I mean, what other reasons are there?
Those are good reasons that you've mentioned, but I think this is a very opportunistic time for us to engage with the market and give proper. We need a perspective shift. Okay. The question is, who's hiding property and who are they hiding it from? In fact, you want to build your balance sheet. True wealth is when your balance sheet pays for your income statement, when your assets essentially pay for your liabilities. So I think we need to think about it a bit differently. You don't want to really hide, and especially now with ultimate beneficial ownership, you want to be proving to the bank how much you actually own, so that you can borrow money on it, and then you can use the bond as the effective financial instrument that it is. You need it for cash flow. So yes, there are people that do hide it from their spouses. You can buy property in the company, register it in a trust. But I would call it, do we call it hiding? Because hiding sounds...
I was about to say, Philip, are we having an illegal conversation this morning? Is this an illegal conversation? I was about to go that route and ask.
Well, it can't be illegal anymore, because the point is, with ultimate beneficial ownership, you can't hide it anymore. It begs the question, who's eating?
Yeah.
You can put it into so many different vessels. At the end of the day, who's eating? It's easier to hide your income. For instance, you could say to SARS that I'm not earning an income on this property, it's vacant, but it's not. You see what I'm trying to say? There are easier ways. You'd rather hide the income than you try to hide the property, because now it's not on your balance sheet. Secondly, you're paying for the asset now. Let's say you put it into someone else's name. You're putting that asset off of your name, means you won't be able to borrow on it again. And then now you want to sell it or do something with it, then you need to be in good stance with that partner or person or sister or brother or grandma, and hope they sign.
They could literally turn their back on you.
Exactly
my point. Exactly. So it's not safe at all to try and do it. I think choose your spouse better. And
let's
then
take it back to the basics. Okay, kids?
So we are seeing a lot of that, but at the end of the day, is it a good thing? Yes, there are ways, but I prefer rather building your balance sheet, showing to the bank that you are a good individual, and you are a high net worth individual that's turning property, and you've got assets that they can borrow against. There are ways to rather invoice and counter invoice between companies, so that there's expenses.
Take us to school, Philip.
So but that's your bookkeeper's job.
Yeah. But then tell me, I know you've mentioned in a way the pros and the cons, but maybe it'll be like a recap of sorts. But the pros and the cons of trying to hide a property, either by registering it under a company or maybe under a trust or someone else.
Yeah, so I would suggest don't do it directly in a trust. And these properties are the properties that you never want to sell, because it's going to attract capital gains tax from Rand 1.
Okay.
So the reason you want to register it in something solid like a company, and this is the vessel I prefer, you put it in a company, because then you can trade in the company, and then you put the shares of the company into a trust. It's not an illegal thing. It's clever business. It's good estate planning. This is what's going to set you apart in the long run. But the pros are that you would also skip estate duty when you die. 25% is going to be taken by SARS. But a trust or a company doesn't die, only the directors die. And you can do a simple change of ownership and then just declare your UBO who's ultimately benefiting. You know, and that's the point. You need to scratch so deep now, and SARS can scratch so deep. I mean, you can't hide. They're in your bank account. These people are closer to you than your spouse. You just never see them.
They're there. They're just there. Sure. I mean, you know, with what you are mentioning right now, Philip, I think in future we need to tap into that brain of yours and the brain of the bookkeeper about clever business. It doesn't have to be now. Think about it.
Ask
Maybe
a lot
at
of
some
questions.
point.
Ask a lot of questions.
Right?
Yeah, especially your bookkeeper. They all, and every scenario is different. So you might have a different reason, but at the end of the day, you want to keep the property safe and build a legacy. You want to leave something behind. You want to leave your mark on this world, and your kids need to be better off for it. So that's ultimately why I would buy in vessels like this. And then there are tax benefits to this. You might be in your personal capacity taxed at 45%. The trusts also, but companies are at 27%. So you would rather declare your incomes in the company and, you know, less incomes and profits in the trust. So there's massive tax benefits as well why people do this.
But let's leave it here for today. Thank you so much for coming through. Appreciate your time as always. We'll see you next week Thursday for Property Speaking. That's broker and owner of REMAX, Philip Skuman.